What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AAPL for Apple Inc., of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. This, of course, will be an update. We've talked about the stock regularly on the channel here, and it seems like everyone thought the stock market was crashing into the end of the day, and certainly, yeah, we did get a little bit of sell-side activity. We'll take a look on the 30 in just a second, but overwhelmingly, we're still well within the bounds of this sort of daily bull flag that's building out, so I don't really see it as an overly bearish indication, at least as of right now. So that could, of course, change if we take out the low end of balance and we really start moving to the downside. But we know that basically as long as we're up and over 176, things are all fine and dandy here inside of Apple. We're getting a little bit of a pullback after a fairly nice run off of those lows from, sort of the mid to late December days, right? So with that being said, the daily looks fine. There's no abundant, sign here that this thing's going to come crumbling down and go to like 150 or 160 even. It doesn't show itself as being that way as of right now. Again, just getting healthy bull flag consolidation for the time being. So let's take a closer look at the 30-minute intraday time frame just to see what else we can learn about the price action. And the only bearish indication that I can really see is that we did technically close the day underneath this 30-minute area of support. You can see support, support, support. And yeah, the last 30-minute bar did close underneath. As of right now in the post market, we're 178.01 by 178.06. So it's not ultimately like these lows have been given up completely. But again, it is a slightly more bearish thing. It would have been better, obviously, if we closed back above that 178.69. So I will give you that in terms of credit where credit is due. So the bears, a little bit of an edge, but we know even any further pullbacks into 176, reevaluate the chart for 30-minute double bottoms. Again, we wanted to see a pattern form off of the support trend line this time around, not just float orders out here, because technically speaking, this was a very nuanced, but it was a lower high, correct? So I wouldn't just float orders out here expecting the bounce. I would watch for some sort of intraday 30-minute pattern to potentially unfold off of 176 if the move is lower in the first place. If the move is higher tomorrow, so let's say that we just open up, drift higher on low New Year's Eve volume, so NYE, there's New Year's Eve, New Year's Eve volume, and it just drifts back higher into the range, then fine, just watch and expect for more chop, especially noting again the light volume from the New Year's Eve session. Eventually, as the new year opens up, the question will become, did we hold on to 176 or are we going to start breaking out up and over 181? Those are really the two levels that you need to be watching inside of Apple. And as of right now, I just wanted to come on here and reiterate that it's not overly bearish, even though, yes, there was a little bit of sell side activity into the end of the day in Apple, as well as some of the broader sectors, right? Your S&P, a little bit of a more aggressive pullback in the QQQ as well. But overwhelmingly, still respecting our bull flag from the daily perspective. So that's ultimately going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.